So the short sellers were right. Tesla is going back to $300, but not how they thought it was. Tesla have just announced a 5-to-1 stock split. So in this video, we're going to look at what that means to the stock price and what it's likely to mean for the future of the stock price. Before we start though, please hit that thumbs up and please also subscribe down below. Just filmed a video about Apple's stock split and I didn't anticipate having to film a Tesla one so quickly. I thought Tesla were going to announce it on Battery Day in September when Elon Musk was like, yeah, well, it's something we're going to talk about. The stock split is something we're going to talk about in September. Now, I think it is a really interesting move, but if you're a current shareholder, it doesn't really mean anything at all. If you're a new shareholder, you're looking to come into Tesla, then it might have some effect, which we'll talk about. So first of all, what is a stock split? So very simply, when a company's stock prices run up too high, like Tesla's has, to over $1,500, let's just use $1,500 for the sake of argument, it becomes very expensive to buy one share. Now, 2020 seems to be the year of the Robinhood investor. You know, like the Chinese New Year's, this seems to be the year of the Robinhood investor, where loads of sort of really younger people, maybe just coming out of school or college at 18 sort of age, are really looking to get into the stock market with banks not paying any interest. You know, people are looking, where should I put my money? And buying one share of Tesla at $1,500, a lot of people won't even have $1,500 to their name full stop. So by offering a stock split, you're appealing to a broader market, a more of a mass market. So 5-to-1 stock split, very simply, if you own one share of Tesla worth $1,500, you'll now have 5 shares, each worth $300 each. So from an accounting perspective, yes, it makes a difference, but if you're a current shareholder, it makes absolutely no difference. So let's say I own 50 shares, I'll now own 250 shares, but each share is worth a fifth the amount. So I'm no better off overall. Now, in the short term, that will come with some volatility. Think about it, there's 5 times more shares in the market, which means there's going to be more buying and selling, there's more opportunity to buy and sell, there's more liquidity in the market, so there probably will be more buying and selling. It might make Tesla's share price even choppier than it already is, which is saying something, as it surged like 13% today alone on the news of the stock split. Also, what the big thing for me with this is, right, is it's only going to be a good thing. It can't really be a bad thing, right? If I'm a current shareholder, I've got 5 times more shares. They're appealing to more people in the market. Obviously, large institutional investors, which take up 75% of the market, they can obviously afford $1,500 per share. They can buy 1,000, they can buy 100,000. That's just what they do. A retail investor, which takes up 25% of the market, that's like me and you, we might not be able to afford one share. So we don't really want to own 0.15 share. It just doesn't feel right, especially if you've got OCD, right? 0.15 share, it doesn't really have the same ring to it as owning a share, does it? But it is appealing to that 25% of the market. So I think it is a smart move because Elon Musk has realized that, you know, he tweeted back in May, Tesla's share price is too high in my opinion. Now we kind of know that he was probably leaning towards a stock split when he tweeted that, which is maybe not how he came across. He thought that Tesla's share price was just completely overpriced, but he probably meant that it was, you know, it was just too high compared to where they are. And you know, they're not in a maturity stage of the business. They're still in that, very much still in that growth stage of the business. So I think it's a good move because he's appealing to a broader market. More people are able to buy shares. And it's just a good thing. Like, you know, if I was 18, I wish I'd got into the stock market when I was 18, but, you know, I was a bit older. But if I got into stock market at 18, I would have looked at Tesla. I know for sure, I'm like, whoa, I can't buy that. My platform I use doesn't offer fractional shares. Whereas, you know, these days, more companies do offer fractional shares. But in this instance, if they don't, people are able to be like, yep, look, I'll buy one share. It's worth $300 now. So from a psychological standpoint, it is going to benefit Tesla's share price. People are more inclined to get involved if they don't, you know, want to own 0.32 of a share of Tesla because that's all they can afford. Now they'll be able to buy one whole share, which is, from a psychological standpoint, it is obviously a good thing. Also, a lot of platforms, a lot of brokerages don't offer fractional shares anyway. So even if they wanted to, you know, you couldn't get involved in Tesla if you didn't have, you know, that amount of money. So it's a great thing. They're appealing to a broader market. In terms of when this will actually happen, it's going to happen on August the 31st, 2020. So each stockholder of record on August 21st, 2020 will receive a dividend of 4 additional shares of common stock for each then held share to be distributed after close of trading on August the 28th, 2020. Trading will begin on a stock split adjusted basis on August the 31st, 2020. it's a very interesting time. Look, Tesla's share price has just surged 13% in one day. I think Tesla rely on news. So at the moment, so if you notice throughout the year, there's always been news, whether that's, you know, Tesla's cars being reduced in price, the Q2 earnings, bringing out the Cybertruck, the dates of the roads, that auto self-driving. So there's always news with Tesla. So I think there was a bit of a lull. There was no sort of news at the moment, and I personally thought Tesla are not really going to announce anything until Battery Day. So I was sort of inclined to think that Tesla's share price was going to just drop a little bit, and then it would spike back up around Battery Day. But obviously that's not the case now. They've announced the stock split. They're introducing some more news, and that's caused a massive increase in the share price of Tesla. Now, just if we look here, this study, which I thought was very, very interesting, by this guy called David Ickenberry, in two separate studies in 1996 and in 2003, David Ickenberry, chairman of finance department of the University of Illinois, found price performance of stock splits outperformed the market by 8% during the year following the stock split, and by 12% over the ensuing 3 years. He looked at 1,000 stocks for each study, 1,000 stocks for each study, including 2-for-1, 3-for-1, and 4-for-1. He didn't look at 5-for-1 stock splits, but that just shows that over the first year and the next 3 years, how the stock outperformed the market. So if the market goes up, let's say 7, 8, maybe 9% each year, probably more like 7%, the stock outperformed that by 8%. So it is a big indicator to show that this stock split is actually going to be very beneficial for Tesla over the short term. But nothing's changed in the business. Nothing's changed with the fundamentals of the business. Elon Musk is still the CEO. It's purely an accounting thing, but from a psychological standpoint, and the accessibility to Tesla shares, it is going to be a good thing. I hope you liked the video, guys. Don't forget to like the video and also subscribe down below, and I'll see you in the next video.